Good day. I'm Martin Gagel with Market Radius Research. It's Thursday, April the 13th, and we've got COO Ian Grant of Progressive Planet joining us. Progressive Planet develops and manufactures key products and ingredients for more sustainable solutions in the cement, waste management, agriculture, and animal care market. I met with Progressive Planet a year ago, and the company has made some very impressive announcements regarding new product developments, partnerships, and the company has shown considerable growth and improvement over the prior year's financial results. I did a site visit to the company's Kamloops operations last May and was very impressed by the operational improvements being put into place. Ian is here to bring us up to speed on the company's advancements and what the coming years could look like for the company. But please remember, this is neither recommendation or investment advice. We're here to learn about the company. Ian, thanks a lot for joining us, and please give us an overview on Progressive Planet.
Yeah, thanks, Martin. I'll jump right in. At Progressive Planet, sorry, I'll look at this screen over here, so apologies to everybody, but I got two monitors going. So
and as well, Ian, you're in like right above the factory floor here. I'm hearing some honks from forklifts.
You'll hear some horns. My office is above the warehouse. I have a little bit of a window that I look out on, and so you'll hear some horns as the forklifts drive around. We're always loading trucks and getting trucks out the door, so there's lots of action happening here.
All right.
So at Progressive Planet, we do clean tech naturally. So we do that with our ancient volcanic ash deposits as well as recycled minerals. We do all that from these industrial facilities you see here in the picture. They've been around for over 30 years, and we employ 62 people out of this business here. These planet-friendly products that we make are sold in over 10,000 retail locations in North America, generating $15.1 million in revenue in the 9 months ended January 31st. And we see strong growth potential in both new and existing distribution channels. At the same time, we're disrupting the combined $100 billion North American cement and agriculture markets with clean tech innovations. And as I'll share with you in just a few slides, we're starting to see some real traction and market validation on those products as well. So that overview can be broken down a little bit further. Really, our business is broken into 3 growth pillars. So first, we have the established vertically integrated manufacturing, which supplies 10,000 retail locations in North America, as I stated, including many of the largest retail chains. That was all done through an acquisition that we did in February of last year. And what it really does is it provides us frictionless access to retail shelves. And the second thing that it does for us, the access to retail shelves for launching new products of the other 2 growth pillars, as well as it provides us with a manufacturing operation. So Martin, I'm not sure if you had a chance to see our pilot plant a few years ago that we were operating out of, but this is much more impressive. As you saw in the picture, we have large scale industrial operations here. We're loading up to 9 trucks a day sort of thing, sending out products to every state and every province. So it provides us with that established manufacturing business that really would take, years to get in place when you talk about all the permitting, building of the facilities. So that was the second reason that we made that acquisition. And the third reason is for the human aspect of it and just getting people that have made these products and built relationships with some of the biggest retailers for over 30 years. So we had innovation, but it made a huge amount of sense for us as we look to commercialize products from these other 2 pillars to lock those things in. So what we have on the chemical fertilizer side of things, it's a $60 billion market in North America. And really what we're doing with that is we're capitalizing on some of these social, regulatory, and economic tailwinds that are really igniting change in this industry. We're seeing it more and more in the news, the importance of bringing out products that are replacing chemical fertilizers for our environment and our soil health. And as we go to launch these products, we'll be distributing them through not only our retail locations, which many of the largest retailers that we supply also sell fertilizers, but also we have a significant amount of distribution networks through distributors and through farm distributors. So on the traditional cement side of things, the third pillar, This is a $40 billion industry. So that's where the $100 billion combined comes in, $60 billion and $40 billion. And there's massive shortages. So it's been quite talked about how fly ash is being phased out. So we're providing other solutions for this industry, proprietary solutions that can replace 50% of the cement and sequester CO2. So that's the overview. I'll get much more into detail in each of these pillars in the next few slides. So on the vertically integrated manufacturing side, as mentioned, we ship.
Ian, sorry, just now that you've done the overview, but just simply like you did this major acquisition a little over a year ago. Prior to that, you have mineral assets in the Kamloops area. Can you just explain what are these? What are you're digging stuff up, which is a high value or an industrial mineral, and you didn't have the supply chain and the products to put it through. So you basically bought one of your customers, I believe it was, and then you're able to fully leverage their distribution and their infrastructure. And tell me where I was wrong or right and sort of simplify that.
Yeah, so extremely strategic acquisition for us for the three reasons I chatted about. But really, the products that we had in our kind of portfolio from our mineral assets and the ones that we ended up acquiring through the acquisition additionally are all volcanic ashes. So they're not found everywhere. They're found where volcanoes erupted and that ash came down and hit a lake bed and formed these minerals millions of years ago. And Kamloops is really a mecca for these types of materials. So we had, on a map surrounded Kamloops a little bit with the assets that we were acquiring. And the reason for that was we saw Kamloops as a real good hub to launch products out of. And then kind of the holy grail of companies that was doing what we were looking at doing from, these products that you see on this slide side of things and the retail relationship side that we wanted to gain was Absorbent Products, which was a company that had been around since 1989. So we were able to get that deal done, get it closed, and we made that acquisition in February of last year so that we could gain, these retail access. We could gain products that could help fund the other two pillars. So revenues from this business help us fund the R&D that we're doing and the commercialization that we're doing of our other two growth pillars, which is really important for us because we don't want to have to go back to the market as often as we were before we were when we were pre-revenue. So it's really helped us in that regard as far as funding the aggressive R&D and commercialization that we're doing of those other two growth pillars.
All right. And what's special about this volcanic ash? Like, can you tell us just a little bit about it without Steve, the CEO, gets very passionate and microscopic about it? Maybe just.
Yeah, I won't go too much into things, but really it's about amorphous silica. So that's a part of all the different volcanic ashes that we deal with. So silica, if you think sand for a lack of better description, is crystalline in nature. In order for it to be amorphous, you have to have something that rapidly heats and then rapidly cools. And that's what happened when all the hot embers would have hit these lakes, is that the stuff that was in there, for keeping it very, very simple and things that are beyond me as well from a chemistry side, but the different things that were in there were basically heated very rapidly by these embers. And then because it was a lake, they cooled at a rate that allowed amorphous silica to form. And that amorphous silica is what's so good when we look at different cementitious products, as well as the different absorbing qualities that we need in many of the different products that we create.
All right. So you mine it. It's like a quarry type mine, and then you bring it to your facilities. You clean it. You
fully vertically integrated. Yeah, we own the quarries. We go out, and it's very surface quarrying. We bring that product back to our plant. We dry it. We have a large industrial dryer. If I go back a slide, sorry. If we go back to this slide, you can see the steam coming out of our stack. This building at the back there is where we would warehouse that raw material. It goes into our plant through an 80-foot long dryer that you saw when you were at our plant. And then it comes up through a series of screens, gets processed, packaged, warehoused in the building in the middle, and goes out through trucks in the back. So it's all very vertically integrated.
Gotcha. All right. Excellent. So thanks. I think that gives a good overview on the assets you have, both the mineral assets and then the value add facility or factory where you upgrade the products.
Yeah, thanks. So the key thing on this slide here is that we're making over 2 million packaged products every year. As I mentioned, those products go out every single day for us, and we have the ability to 2x output with our existing assets that I showed you in that picture. And then we have the ability to 8x output with investment. So that was one of the things that we looked at is, okay, if we want to aggressively grow this business, are we able to do it with the business that we want to acquire? And the answer to that is yes. The industrial dryer can do up to 450,000 tons a year, which would be the biggest bottleneck and the most expensive bottleneck if we were to look at growing this business. So we have that ability to grow things up and to the right. So these are a few of the products, and then these are some of the largest retailers. Many of the largest retailers that we use, we actually can't say that we sell to them. So these are a few of the ones that we're allowed to share with the public. On the chemical fertilizer replacement side of things, as I mentioned, there's a lot of social and regulatory tailwinds pushing this market. The reason for that is because chemical fertilizers mask a critical problem of degraded soil and lead to further land degradation. And it's come out recently that the UN, the United Nations, estimates that at this rate of soil degradation, we have less than 60 harvests left. So, talk about critical. I have a 2-year-old son, so this is one of the reasons that I get out of bed every morning and try to make a difference on this side of things, because I want him to have a very bright future.
And sorry, with the fertilizers and that, it's getting depleted. They put in the big macro sort of nutrients or fertilizers, the potash and so forth. But it's all the little things, the bugs that are growing in there, and like that I'm quite not sure. But basically, it's unhealthy. It's like in the human body, there's the microbiome, which is getting a lot of thing, and your fertilizers are helping sort of recolonize and just make the soil more healthy.
Yeah, so there's a lot of people smarter than me that could give you much more clear answers, but really chemical fertilizers only came out after World War II. So the industrial war machine of World War II needed something to do with all their chemicals. So they started making chemical fertilizers, and it seemed like a really great thing because they were able to boost yields. But what happens is that year over year, farmers are having to use more and more fertilizer because the soil is actually getting less healthy and degrading. And so that's where I say that it's masking the degrading soil, right? Is that we're able to see yields, but at what cost? We're seeing more and more going in, which has an environmental degradation as far as runoff of these fertilizers, as far as the off-gassing of these fertilizers, as well as the production of these fertilizers. And what's happening is that you're seeing these soils get more and more unhealthy to the point where they just look like this on the left, where they're no longer soil, they're just dirt, they're dead dirt, right? And you can't get anything else out of them. And so there's a big movement towards regenerative agriculture, and we're a part of that in that we're creating chemical-free fertilizers that are going to help rebuild the soil. When you look at some of these other practices that regenerative fertilizer brings in as well, this is one part that helps with that story. So in that way, we're really going after the meat of that $60 billion industry. This isn't products that are in a niche, horticulture market or something like that. We're really going after broad acre applications where it can replace the normal NPK fertilizers that are used in the broad acre world every year. And then we're also going after the retail. So those are kind of the two biggest chunks of that industry. And our products are going to be looking to help solve the problems of those. And so again, because of the vertically integrated manufacturing that we have and the established distribution network, we're able to have higher margins from the vertically integrated side, as well as, get faster to the market, because we're not looking to build relationships with the tractor supply of the world. We're already in 2,300 tractor supply stores in the US in every province or in every state. So it helps us get there faster. And
so right now you're selling kitty litter and that and oil cleanup materials to tractor supply.
Tractor Supply would be feed additives and different animal health products that we would sell to. Yeah.
All right. And then once you're selling to them and you'd like, hey, now we've got a fertilizer product, they know who you are, they know you're a reliable supplier, exactly. and you can leverage that.
Yeah. Yeah. At least you have your foot in the door, right? To have that conversation with the person that is buying from you every day, for lack of a better word, right? So yeah. You're not spending years trying to get that foot in the door, because it is hard. From what I've been told, I wasn't one of the team that did it. Obviously, we acquired the company that did that, and they're still here. So it's not an easy thing. And that was, again, a very strategic reason that we did that acquisition. The other thing that I want to highlight to that point is that we have experience launching these proprietary products and getting them into these distribution networks, right? So Activated Barn Fresh, you would have saw that being produced when you came. It's a product that was at the time first of its kind, and is an extremely important solution for organic farmers. That was invented by our team here. It was produced in our plant here. It's patented until 2033, and we have sold 18 million since launching that. So it's an extremely important product, and we were able to take it basically from idea to successfully commercializing that product. And we're going to use that same formula as we go to launch these other products as well. And so how we're doing that, our commercial roadmap is that right now we're producing our first organic pearled products that are going to go in a seed drill application in the Canadian prairies in the spring of this year. That means that we'll be having a full season of growing validation by fall of this year. And that, information that we get from those customers is going to help us launch commercially in spring of 2024. So we wanted to be smart about this and not have a huge CapEx before we had orders. So we've actually gone out and had a contractor produce our formulation of this product for this spring, so that we can get it out into the fields this spring, see the results of it compared to their other fields, and then build our commercial plan from that for next year. So we're extremely excited about that, and it's very near term for us to see the results of these very important fertilizers for the world.
All right.
On the third pillar, the traditional cement replacement side, if the $363 billion a year cement industry were a country, it would be the third largest CO2 emitter in the world, after China, after the US, but worse than India. So Canada is committed to reducing emissions by 15 million tons cumulatively by 2030 and reach true net zero by 2050. So this is, arguably one of the most public things right now, as far as, picking the industry to go after and force change on from a climate change standpoint, and for good reason. They're making up, I think 29% of all industrial emissions come from the cement industry, making that up a little bit. I think that's the number that I read. And, it's absolutely imperative that we do this, because we can't phase out cement. It's only going to grow. The concrete is the second most used material in the world after fresh water. It's more needed now than ever because of the effects of climate change. We see homes being burnt up that are built from timber. We see, storms knocking down houses. And so we need more resilient building products. And concrete is one of those products, but we need to find a way to make it better. And that's what we're doing with our proprietary technologies. So Pause Glass 100G is a product that's made from post-consumer glass that's collected in the blue bin every day. So if you put your pickle jars out in your blue bin, we have the ability to get that through our partnership with Recycle BC. And then we're going to turn that, grind that, sequester CO2 into it, and use it to replace cement in this multi-billion-dollar market. So as I mentioned, we're seeing some serious traction on this side. Recently, we announced a partnership with Lafarge Canada. Lafarge is owned by Holcim, and Lafarge Holcim is the largest cement company in the world by revenue. So we're extremely excited about this partnership, which for us, we're going to be launching a pilot plant this year in 2023 to start making Pause Glass on a smaller scale that can do up to about 12 tons per day. We've got confirmed recycled glass from Recycled BC, another partnership on that side. And what's really exciting about this for us is that we're going to be selling to Lafarge in a whole scale model, but the potential for growth is that we're producing a patent pending product that we believe that we can license, and Lafarge is going to be validating it as a potential licensing opportunity for them to put this technology into their cement plants around the world. So what's so exciting about this is that it works so well with the cement companies. We're not disrupting in a way that we're disrupting their business. We're disrupting in a way that we're providing something that they would want in their business, which is extremely exciting. I've been on the other side as a young, naive entrepreneur trying to disrupt too much. So this is exciting that we're in a nice fit where we can bring in products to their business, sequester CO2 from their flue stacks, which they're being told that they need to do, and then replace some of the cement at the end of their process as they go to sell it to concrete producers, which again, they're being told that they need to do. So extremely exciting for us. The technology can replace up to 50% of cement. And again, we'll be launching that pilot plant later this year to be hopefully commercial with it in 2024 in partnership with Lafarge.
So, sorry, can you just, you take the pause glass, what part of the concrete does it replace? And
Yes.
and how does it, so what is it, and maybe just explain the concrete, the
Yeah.
cement making process a little bit and where this fits in.
Sure. Okay. Really good question. So concrete, as I mentioned, is the second most used material in the world after water. Concrete is made up of cement, which is the binder, like the glue. It's the egg and the pancake that holds everything together. And then it is made up of sand, rock, water, and admixtures. So the cement is kind of the key part of it that holds it all together in the end. And it's what makes it gray when you look at this and makes it have a smooth surface. But it's what makes up over 90% of the emissions in that concrete. So cement, when it is made from limestone shales and other rocks that go into a kiln. It's heated up over 900 degrees, the limestone is, and then there's a phase change that happens that effectively releases a significant amount of CO2 into the environment. And then after that, it's actually heated up all the way up to 1450 degrees Celsius. So there's two major things that produce that CO2 emissions. The first is the chemical phase change, moving from limestone to lime and having CO2 off gas, which makes up actually 54% of that rock is just gone because of this, or only 54% of that rock is left at the end of this story. And then also all the emissions that go into heating that kiln up to 1450 degrees Celsius. So that's why it has such a large impact on the environment. And so what we do with our product at the end of that process is when you end up with the cement at the very end, when it gets put into concrete, a portion of that can actually be removed for our pause glass, so that instead of, say, 15% for a round number of cement in a mix of concrete, you could have 12%, and 3% of it could be our pause glass sort of thing. So now you're reducing that footprint by, say, up to 50% in every concrete mix sort of thing.
Okay, so it acts as a replacement. I don't know, a bad analogy maybe, but sort of breadcrumbs in your meatloaf. It puts a filler in there, but as well, it actually adds strength to it. It doesn't, it's not like a deteriorate, it doesn't make it a worser product. You've done some testing where it actually, it's a stronger, better product.
Yeah, that's correct. So again, good question. Many of the solutions that are out there, the fly ashes of the world, they're used because they're cheap, they're readily available, and they'll provide, long-term durability after 56 days, but they kind of have a worsening factor at the beginning because they're only maybe 70% of the strength at 7 days or beyond. And what we have with Pause Glass 100G is we're actually able to hit, pretty close to par at 7 days with Portland cement, and then exceed its strength at 28 days. So you're getting a stronger product within 28 days with Pause Glass, and then you're also getting a more durable product. So when you're looking at chemical durability as well as ingress from water that would cause chlorides and other issues like that. So a more durable and stronger product when you use Pause Glass.
All right. And then just to reiterate, the business model is you're going to build a facility to show that it works. but in the future, you don't have to build 100 factories around the world doing this. You can just license it to a Lafarge or whoever. They can buy the recycled, the glass, and then grind it up, do your process to it, and then you just take clip a fee per ton of glass that's used, or however you measure it, and you can just license it and receive a monthly check, so to speak.
Yeah, so there's really three ways that we can do this. We can license it, we can wholesale it, or we can retail. And what made the most sense to us and what is our growth strategy is that we would wholesale once with our partner Lafarge to prove to them that what we have is real, and have their input from the very beginning of it in helping us build a plant that they would want to license, and other cement companies would want to license. So we're really excited about our partnership with Lafarge, but it's a non-exclusive relationship in that it allows us to have other companies in the world, other major cement companies around the world, come to us and license this technology as well. That's really exciting for us to not only have a partnership with Lafarge, but also have the opportunity to really scale this globally with other partners as well, if they're excited about it as Lafarge is.
All right. So can you tell us a little bit about this pilot plant that's going to be running by the end of this year?
So we'll be breaking ground on it by the end of this year.
Okay.
It's really exciting for us because we emit emissions from our existing operations today. We emit about 4,000 tons of CO2 from our operations to make the products that go to the 10,000 different retail stores across North America. We'll be able to actually sequester some CO2 from our operation when we make pause glass. That was something that we were excited about. We were excited when we came here and saw the flue stack for the first time and said, you know what, we can make a difference and start sequestering some of that with pause glass. And that's exactly what we're going to do with our pilot plant. So we'll start receiving glass from Recycle BC. And once the plant is fully operational, we'll be cranking out pause glass for Lafarge. And in the meantime, Lafarge is going to be providing their insights and their input in how we design this plant in the best way for a commercial, which, I mean, couldn't ask for a better partner, somebody that makes powders every day on such a massive scale around the world. So,
and then that'll be in 2024 that you're going to be pilot plant production. Is that right?
We sure hope so. Obviously, there's always challenges when you buy equipment and things that can come up, but our plan is to break ground in 2023 and have a plant operating in 2024. Whether that means that the product ends up in the 2025 season or the 2024 season will remain to be seen, but we're excited to be breaking ground on it this year. And of course, we're going to have our running shoes on and make sure that we're getting product out as fast as we can.
Yeah. And this is going to be commercial. You're going to be selling it to Lafarge. It's not obviously big, huge scale, but that'll generate, you're providing them a valuable product, presumably, and they're going to pay you for it?
Yeah, that's correct. So obviously I can't, there's non-disclosures in place, so I won't get into exact numbers, but it is a wholesale model. So we're selling it to them wholesale, with the whole point being that we're creating something that they would want to license on a bigger scale. So again, we're doing this once on a whole scale model. They will absolutely be paying us for that product because there's value added, and you will also get it. We will also get a tipping fee for the glass. So you get paid to take post-consumer glass as well. So
okay, so you don't have to buy the input material. You get paid to take it because they don't know what else that's the best option.
That's correct. So basically, how the market works is this product can go to landfill and get you pay to send it to landfill, or you can pay to send it to somebody who's going to clean it and turn it into something that's value added. And we believe this is one of the best use cases for glass out there. I mean, we can replace Portland cement can be up to 1 ton for 1 ton CO2 for 1 ton of Portland cement. So we'll be able to replace those emissions with this product, as well as sequester CO2 into it from our operations. So for us, we believe this is the best use case of glass, and our partner Recycle BC has been willing to give us the glass for this project. So they obviously believe that it's a good use as well.
Okay. And can you take any kind of glass, like everything that gets chucked in the recycling bin, or like only brown glass or whatever it is?
Yeah, we're agnostic when it comes to types of glass that we get. So once you grind it all down, the refracting properties out of it, so it all looks the same in the end, anyways. Obviously, the cleaner it is, the less work it is for us. But
Yeah.
obviously, the dirtier it is, the more that they want to get rid of it. So there's a little bit of a balancing act there. And until we're in that industry manufacturing products from it, we're not going to know all the answers. But yeah, in theory, we should be able to take any type of glass. And we're starting with the blue bin glass, which will be um, all different types right from the beginning and dirty from consumers. So
Neat. All right. Think that explains it well. Thank you.
so on the share structure side of things, total cash expended from all four full warrant exercises about 13.6 million, and most of those are coming out. Pretty exciting for us. Obviously, you can dig in deeper on this. I won't go through it all on this webinar, but it's on our website and it's in this presentation, which is on our website as well. The growth summary. So I'll go through this, really kind of take you through where we've been and where we see things going, which, as you can see by this, is up and to the right. So February of last year, as mentioned, we made an acquisition for the vertically integrated manufacturing business. Once we did that, we quickly realized we were in a period of time where we needed to put our heads down, make some significant operational improvements to the business. And we did that. We increased our margins by 19% from March to October of this year. And then after that, we announced our first profitable quarter of 5.4 million in revenue and 32% gross margins. And we were able to kind of pick our heads up and start, really focusing more on the commercialization of these new products again and telling our story to the market. In January, we announced an additional 4.5 million in revenue, bringing our 9-month total revenue to 15.1 million. So a track rate of about 20 million in revenue for this year, which of course ends April 30th. And so you'll see those numbers sometime this summer. In spring of this year, as mentioned, we're going to be launching those commercial fertilizers, the chemical-free fertilizers, into broadacre application. That's really important for us, as I mentioned, so that, come winter, we're going to have a full season of growing validation and then build our plan as far as distributing to those farmers and how we're going to distribute the rest of those fertilizers and grow that business. Those decisions will be made based off that information so that we can launch more commercially in 2024 and then rapidly grow from there for that business. In 2023, as mentioned, we're going to be launching the pilot plant or breaking ground on the pilot plant in partnership with Lafarge and Recycle BC. And that technology is going to be evaluated by Lafarge as a licensing opportunity. In 2024, we'll have an operational pilot plant for the pause glass, as mentioned. And then in 2025, we'll be launching in spring of 2024, we'll also be launching our second broadacre fertilizer, as well as launching fertilizers into retail applications, which we're extremely excited about, given the scope of the relationships we have on that side of the business. So in 2025, you can see that we see all these businesses. I mean, the least exciting business that we're in today is the cat litter business, and it's $1 billion business in Canada, which you might not think of, but we're doing single $1 million of that a year. And so there's huge growth opportunity in every aspect of the business that we're in. And now that we've made these operational changes, we can simultaneously push hard in the next fiscal year to grow our, legacy business. As well as you can see here, we're going to be launching pretty aggressively these new products. So for us, it's extremely exciting. The next 24 months, there's a lot of catalysts, a lot of valuation drivers that are going to be happening for us. So it's an exciting time to be a part of Progressive Planet. And, selfishly, as a Progressive Planet shareholder, it's a really exciting time to be a Progressive Planet shareholder as well.
All right.
That's really all I've got. I can go through all the people, but I won't bore everybody on the webinar with that. You can find all that stuff on our website as well. We've got a really strong team that we've put together to make all this happen.
Yeah. I've got a question here from the audience, and I think I saw it on the last slide you had there. What is in the 5 blue silos on one of the photos you had?
Yeah, so those are all different. Here, let me show you here. What is in our different silos? So those are different products. So as they come through and they get different sizes, they'll end up in different silos. So we have a really strong manufacturing team here and plant manager, Andrew Towsley, and they make decisions on where products go so that they can get packaged to meet our customers' orders and head out the door.
All right. So those are end products, like once they've been manufactured, and then from there you put them into big tote bags or boxes or whatever?
Yeah, they could be both. So they could be products that end up going through a secondary production process as well. So it could be either or. It could be product that's partway through becoming an end product, and it could be end products.
Okay. All right.
It's a bit of a balancing act for them.
Yeah, managing your production, and you do it in different batches and so forth. Okay. Some questions here from the audience. In a recent interview with the Vancouver Sun newspaper, it was stated that the pause glass pilot plant will cost in the order of $10 million to build. That plant is planned to be in operation in 2024. But will the company fund it? Or I guess broadly speaking, do you have plans on how to fund that? Are you capable of funding that at the current times, or what are the plans for that?
Yeah, so I'll address that. The actual equipment that we plan that is planned for that plant will be less than $5 million. The $10 million number is probably looking at the full 4-year scope of running that plant in partnership with Lafarge, taking into ground absolutely every detail that could go in as far as costs. But actual equipment that we would be purchasing would be less than $5 million. How we plan to fund that. So we have operating line, of course, with our business, including a line for purchasing equipment specifically. There's a lot of different ways that we can do it. Obviously, the Canadian government has a pretty strong want to have these products out there. So there are grants that we can apply for this project. And of course, we can go back to the market and raise for this. But, some of those first two ones would be desirable for us as far as getting some government funding if we can to help fund this. And then, of course, using our operating lines if we have to.
Okay. And is the plan to build it on your current package of land, or do you have to buy new land or put it closer to the Lafarge site? Or
so we have 4 industrial lots. I just went back to this slide. You can see, so this building over here, the lower section of this building could be used for that plant, or we have a 4th lot that's not shown here where we could put it on as well. So we don't need to buy any more land. We have 4 industrial sites. It's just a matter of, making the decision of what's best for our business as far as where we're growing in other areas as well, whether we put it in this building here on the right or whether we put it on our other industrial property.
All right. And then another question referring to that same article, and you referred to this 4-year test. Can you describe how the 4-year testing is anticipated to look like? What will happen to the plant after testing is done? And does that mean pause gas becomes commercial starting in 2028? There are a lot of questions there. You can start with one, and
I know what's being asked there. So
okay,
really good question that I was actually really hoping to clear up today as well. So once pause glass is commercial, which we expect in 2024 to have an operational plant. So whether that's commercial and sometime in 2024 or early 2025, that's when it's commercial. So product will be going out, being put in projects around BC, and that's up to our partner Lafarge to decide where that product ends up. We'll know very quickly if we have something with this plant. That's the reality.
And they're paying you for it, so that's commercial.
And they're paying us for that product as well. So for us, it's about proving to Lafarge, it's about proving to major cement companies around the world that we can make product and we can make it in a way that it ends up in these projects and it's very successful. And that's going to be known very quickly in the first few years of this product. And then we'll have a package that we can license. So the whole concept of 4 years is what Lafarge wanted. They wanted exclusivity as far as that pilot plant for 4 years. But we're able to license from day one of that relationship. So it's really going to be up to us to get this plant out and producing product as fast as we can. And we can be licensing from day one of the production if a major cement company likes what they see.
All right. But so generally, there's not a general exclusive licensing program with Lafarge, but Lafarge does have an exclusive to buy all the product coming out of this facility for 4 years.
Yeah, that's correct. And I can't get into too many more details, of course, but we're really excited about the relationship we have, and we're excited about the fact that we're not limited in how we are able to license this product either. It's a win-win, I think, for all sides.
Yeah, but presumably one of the advantages Lafarge gets is they get a better vision on how the product works and exactly. All of that. They'll have a leg up on other people in case.
And that's what they're excited about, right? Is to be able to be at the ground floor and help shape this so that in the end, it is something that they want to license, right?
Yeah. Or just outright buy, possibly.
I can't speak for what they would be motivated.
Sorry, I shouldn't have said that. How big is this facility? Can you remind me how many tons of Pause Glass 100, I believe, how many tons do you expect to be producing?
Yeah, so the plant itself is designed to make up to 12 tons per day of Pause Glass 100G. So that could be like 3,200 or so a year of that product. So still a very small scale, but it's the right scale for our partner as far as de-risking how much they are willing to take in a year of a product that is going to have some commercialization challenges. Like it's just the reality of launching a new product. So it was the right size for them as well as for us, and it's the right size for us to understand and be able to grow that at least tenfold for future plants. So if you're too small, there's not really a good scale of equipment to build off of. And of course, if you're too big, then it's a huge capital risk up front. So this was a nice piece in the middle for us to be able to produce meaningful amounts of product and then still be able to design, say, 100,000 ton plant from the data built from this pilot plant.
And tell me if you can't answer these because of the contract terms, but is it like a take or pay, or because if they don't buy the product, then you're sitting in an empty, like a non-operating plant, or if they don't take it, then you have the option to sell it to someone else, or it's just take or pay. You guys take it, or you got to pay us for it regardless.
Yeah, so there's obviously Lafarge wouldn't want a product that didn't meet spec. So we're held to meeting the spec of industry, which is for ground glass pozzolan, which in the lab and the bench scale that we have here, we're passing with flying colors. So we're held to meet that spec so that the product at the end of the day is successful in concrete operations.
Yeah.
They're at least willing to find homes for that material if we have challenges in meeting that spec at some point. But we also have other uses for materials. So there's opportunities for us to carve out oversized material, coarse material, for example, for our sandblasting grit. So we've sold for years Can Blast, our own brand called Can Blast of sandblasting media derived from post-consumer glass. And we've paid to get that product brought to us in the past. But when we have our own supply of glass, it's very easy for us to screen off oversized product, bring in additional product, and sell that as Can Blast. So there's opportunities for us in this to carve out other businesses and grow other businesses from the post-consumer glass market to help with additional revenues for our business. So there's a lot of exciting things with this business.
So, but as long as you're manufacturing the spec Pause Glass, they're going to buy it.
Yeah, which is a published spec within CSA standards, within ASTM standards.
Okay, so you don't need any new validation or?
No, it's not some creative thing that they've carved out that's going to be really hard to hit. It's the spec from industry that we have to hit. So we would have to hit it regardless.
All right, that makes sense. Um, is the pause ZEO just for magnesium concrete?
Is it just for magnesium concrete? No.
Pause
So yeah,
ZEO.
so yeah, I gotcha. So zeolite falls within the class of natural pozzolan. So natural pozzolans, again, just like ground glass pozzolan, are a published spec within CSA and ASTM standards. So we can sell that into the cement or into the cement and concrete industry as well. And again, we have relationships with large cement companies that we can start, testing that with them as well. Obviously, Pause Glass is a very sexy thing that we're starting to launch now, but we haven't forgot about Pauseo, and we are actively growing that side of the business as well. But we are excited about the customer that we have in ZS2, and that they are excited about Pauseo as well.
All right. Whatever happened to pyrogenesis testing on the pause glass and silica?
Yeah, so it's still ongoing. I think we're about halfway through it. With them, there was obviously on their side, on the R&D side, there was some major delays in getting us results. So not a lot to share from that side yet, but still something that we are excited about the potential of, which really is finding ways to extend at the point where supply exceeds demand, or demand exceeds supply of post-consumer glass, finding ways to extend the life of that post-consumer glass and get more volume for it. So some really exciting projects that we have both in-house and with Pyrogenesis on that side of things.
All right. Well, we've got no more questions from the audience. I think you've explained the key things quite well here. How about just you gave your chart on sort of your major milestones and expectations over the next coming years. Let's say for the next 6 to 9 months through the end of the year, what types of news flow should investors be looking to hear from? Hopefully by the end of the year, you'll be breaking ground on the new facility. What other types of new customer wins or new product launches, without letting the cat out of the bag too soon, but just sort of the type of news to expect?
Sure. So I'll maybe refer back to this slide a little bit. So, and I'll speak to them each kind of color coded. So on the vertically integrated manufacturing side of the business, we really had our heads down for the past year, making significant operational changes that made the business more profitable for us. So it is absolutely in our best interest to have that business as profitable as possible, because it funds the other aspects of our business to a large extent, so that we don't have a really, really high burn rate, which many clean tech companies would have without something like this. So it's a little bit interesting to look at, our growth strategy on this side. So you can look at it as the worst of both, in that we have a manufacturing business that's maybe not as profitable as it could be without the clean tech innovation, or you can look at it as, hey, you have this business that's helping de-risk the other side of this business, the massive spending that's involved in creating clean tech innovations to the scale that we're doing, and have the upside of both, right? So that's how we view it. That's our growth strategy, is that we have kind of the best of both worlds in this, and that at the same time as we're running a profitable operational business that has, products in 10,000 retail stores and products in every state and every province, we're also simultaneously developing the next generation of clean tech innovative products. So we see, major growth opportunities on just this side of the business, just the legacy side, now that we've made these operational improvements. And, we're going to be pretty aggressively, our sales team's going to be pretty aggressively trying to grow that business over the next fiscal year. So you should expect to see some news from that side, as far as new products growing into existing distribution networks, or products entering new distribution networks. On the fertilizer side, as mentioned, you should expect to see some news on the fertilizer ending up in farmers' fields this spring, and then stay tuned for some results of those as fall rolls around, as far as the validation of those products in a full growing season. And then of course we'll be in the all within 12 months, because we're in spring of 2023 just about here. So leading up to spring 2024, you should expect to hear a bit more of our commercial plans as far as launching those much more aggressively, as well as additional chemical-free fertilizers that we'll be launching next spring. And then, of course, on the pause glass side, we've spent quite a bit of time talking about, because it's such an important product and such a sexy product, for lack of better words, that is going to be breaking ground this year. And we're really excited about the partnership that we've been able to solidify with Lafarge. Just world-class individuals from that side that we've had the pleasure of meeting and spending quite a bit of time with. I actually took our R&D team down to Seattle and spent some time with their testing facility and got some training so that we can do more R&D in-house, more of the R&D that we need to do to make decisions quickly in-house. So really growing our relationship with them quite quickly, and been really impressed with the individuals on that side.